2023 is almost over. Hopefully, next year will be even better, yeah? But as usual, before the year ends, it is time to do some tax planning so that next year you'll be able to save a few hundreds, if not thousands of dollars off your tax bill. So in this video, I will show you 9 ways on what you can do to save on your income tax. Then I will also show you what's the best way to pay for your tax bill to save even more money. Also, do join my Telegram chat group to discuss or ask any questions that you may have. Alright, let's jump right in. Here's a quick intro on how the Singapore tax system works so that you don't blur later on. This is the Singapore tax rates for the year of assessment 2024 and onwards. Let's say you earn 100k this year, you'll be in the 11.5% tax bracket. For your first 80k, you'll be paying $3,350, and for your remaining 20k income, you'll be paying an 11.5% tax. If you add up everything, it will be $5,650. Wow, sibei painful, yeah? But you know what's more painful? Starting YA 2024, they have also added a new tax bracket for people earning more than 500k. So if you are someone who earns a lot of money every year, like that Gupta son, you will see your tax bill increasing next year. That's why it is so important to do all these tax reliefs so that you get to save on your taxes and contribute less to nation building. Though, just take note, you can only claim up to 80k in tax reliefs, yeah? And with that, let's start with the first tax relief, CPF Cash Top-Up Relief, where you can enjoy up to $8,000 tax relief when you top up to your own CPF SA, MA or RA. Then another $8,000 tax relief when you top up your family members' CPF. So that's a maximum of $16,000 worth of tax reliefs here. However, just take note, in order for you to enjoy tax reliefs by topping up to your siblings or spouse CPF, they need to be earning less than 4k in the previous year. This includes employment income and even other types of income like bank interest, stock dividends, and so on. Though, this rule won't apply if they are handicapped. As to which accounts you should top up to, I feel that it is always better to top up to MA first, since you can use your MA money to pay for all kinds of medical expenses, such as vaccinations, hospital bills, and insurance premiums, whereas the money in SA is just like meh, stuck in there till you reach retirement. Also, for SA and RA, you will only enjoy tax relief up to the current full retirement sum, which is $198,800 in 2023, and for MA, it is up to the basic healthcare sum of $68,500. Anything more than that, you won't receive any tax relief. Next, you will also enjoy tax relief when you top up to your supplementary retirement scheme accounts. For Singaporeans, it will be up to $15,300 tax relief, and for foreigners, it will be $35,700. Wow, so good ah! But the downside of topping up to your SRS is that you will only earn a tiny 0.05% interest on the SRS account. That's why it is important to invest your SRS money to get a higher return. I've already done a video on how to invest your SRS money, so do check it out. Another downside of topping up to your SRS is that if you do decide to make an early withdrawal from SRS before the statutory retirement age, you'll be slapped with a 5% penalty while also being taxed on whatever you withdraw. So before you make any top-ups to SRS, you need to be clear on your retirement plans, yeah? Though, with that being said, it is still a good idea to open an SRS account and top out $1 into it. By doing so, you get to lock in the statutory retirement age, which is currently 63, and will further go up to 70 years old by 2030. Quick pause, did you know that besides Weeboo's fantastic sign-up rewards, Weeboo also provides useful order types besides, just limit order and market order? The first order type that I want to show you is the trailing stop. This order type is useful in situations where you are ready to sell a stock, but at the same time, you don't want to sell too early just in case the stock continues to go up some more. With trailing stop, what you can do is set how much you want to trail by. It can be either a price amount or a percentage. If the stock goes up, nothing will happen, but if the stock falls by the amount or the percentage, a sell order will automatically trigger. The second order type is group order. You have either limits or market plus take profit stop loss order. This is useful for traders who after buying their shares want to automatically set a take profit order plus a stop loss order. With these order types, you can now trade smarter with Weeboo. Also, if you sign up using my link down below, fund any amount and keep the money there for 30 days, you will get to win 10 free shares worth up to $5,000 in total. Besides that, there's also a money boot promotion where you can earn up to $3,000 by funding more. So if you are interested in trying out Weeboo, do sign up to them using my link down below. With that being said, let's get back to the video. Next, if you have kids, nice. Here's even more tax reliefs for you. First, you have the qualifying child relief of 4K per child. Though, this will only apply if your kid is still below 16 years old, still studying, and is earning less than 4K a year. Or if your child is handicapped, you qualify for $7,500 tax relief per child under the Handicapped Child Relief. These reliefs can be split between you and your spouse. Though, it is still best to give the relief to the person who's earning a higher income so that he or she can save on more taxes. Second, if you are a working mom and not a stay-at-home tai-tai, you will qualify for the Working Mother's Child Relief. If your child is born before 1st January 2024, the more kids you have, the more reliefs that you will get. The numbers will add up. So let's say if you have 3 kids, you get to have a total of 60% tax relief for this. Though, just take note that there's still a cap of $80,000 tax relief, yeah. Unfortunately, if your kid is born after 1st January 2024, the Working Mother's Child Relief will be a fixed amount instead of a percentage. But I guess got relief better than no relief, yeah. Third, if your parents, grandparent, parent-in-law or grandparent-in-law is helping to take care of your kid, free childcare, you will qualify for the $3,000 tax relief under the Grandparent Caregiver Relief. Take note, you will only get $3,000 tax relief, yeah. So even if the entire kampong of grandparents come and take care of your kid, it will still be only $3,000. To be eligible, the caregiver needs to be living in Singapore and is earning less than 4K from their job. Your kid needs to be a Singapore citizen who's 12 years old and below. Fourth, if you hire a helper, you will also be able to claim 2 times of the total foreign domestic worker levy paid in the previous year. This only applies to 1 helper. So even if you got like 5 helpers, not sure need so many for what, you will still be able to claim on just 1 helper's levy. Next, because the government wants to promote filial piety, there's the parent relief and the handicapped parent relief, where if you are supporting your parents, grandparents, parents-in-law or grandparents-in-law, you will get some tax relief. To be eligible, the dependent needs to be 55 years old or more and is earning less than 4K a year. This includes employment income, bank interest, dividends, and pensions. However, this rule doesn't apply if the dependent is handicapped. Also, just in case you're wondering, if your parent is a foreigner, he or she needs to be staying in Singapore for at least 8 months in order for this to be eligible. Depending on whether the dependent stays with you or not, you will get to claim different amounts of tax relief. You can only claim for up to 2 dependents, meaning a maximum of 18K if they stay with you or 11K if they don't stay with you. Also, take note that each dependent can only have 1 person claiming for it. So if you got like 3 siblings, you guys need to play 1, 2, just to see who gets to claim, yeah. Next, if you like to do charity, you will also get to enjoy a 250% tax deduction on your donation amount. So for example, if you donate $500 this year, your tax relief will be $1,250. But just take note, you can't just anyhow donate to some random auntie uncle on the street, yeah. The donation needs to be to an approved institution of a public charter in order to qualify. One way to make sure is by going to the charity portal to check. Children's Cancer Foundation and the National Kidney Foundation are eligible. Next, if you have served NS before, good news. All eligible operationally ready NS men are entitled to NS men tax relief, where you'll be eligible for up to $5,000 worth of tax relief. But wait, that's not all. The wife of NS man will also get a $750 tax relief. Same for the parents, who will get $750 regardless of the number of children who are NS men. Next, if you have attended any approved course that's relevant to your employment or vocation, you'll be able to claim up to a maximum of $5,500 in course fees reliefs. Though it must be related to what you are currently doing. So general courses like internet surfing, social media skills, Microsoft Office won't be eligible, yeah. Last but not least, if you are someone who usually works from home, you'll be able to claim some employment expenses, such as an increase in your electric bills, telco bills, Wi-Fi bills. However, just make sure not to include stuff that are for personal use, such as your new TV or installation costs and so on. But more importantly, if you do decide to claim for this, you need to make sure that you keep complete and proper records of all expenses incurred for 5 years. So those are some of the tax reliefs that you will be able to enjoy. So let's say you are currently earning $120,000 this year. This means you'll be paying a super high $7,950 worth of taxes. But now, let's include some of the tax reliefs. You first automatically get a $1,000 earned income relief. Then, if you are serving NS, you get another $3,000 under the NS Man relief. Then, you top up $8,000 to your CPF MA while also topping up $8,000 to your parents' CPF RA because you are a filial child and not a chasiu. You also contributed $10,000 to your SRS. You have a kid, so you claim $4,000 from the qualifying child relief, $3,000 from the grandparent caregiver relief, and because you are also supporting your mom but she doesn't stay with you, so you are claiming $5,500 from the parent relief, which means in total your chargeable income is now just $77,500. You just went from the 11.5% tax bracket down to the 7% tax bracket. Sui bo. Now, here's the best way to pay for your taxes. The first thing you want to do is head over to IRAS and change the payment plan to 12 months installments. Then open up the HSBC Everyday Global account and set up Gyro for IRAS to deduct the payment from this account. That's because if you are able to just deposit $2,000 every month while performing 5 eligible transactions with the account, you will get a 1% cashback on your Gyro transactions. This means you will get to save 1% on your credit card bills, income tax bills, and so on. But wait, that's not all. You can go one step further where you use CardUp to pay for your income tax to earn miles on your tax payments. For recurring tax payments, CardUp charges a 1.75% fee. So according to this chart by the Mile Lion, there are many cards that can earn miles when you pay via CardUp. But the easiest card to get is the UOB Privy Miles Visa card. So let's say you use this card to pay for your tax. You have a cost per mile of 1.23 racks, but also don't forget about the 1% cashback that you get from the HSBC EGA. So the actual cost per mile is lower than that. Also, if you use my code KELINVEST, you get to save another $30 off your first payment. So here's the final flow chart. By using UOB Privy Miles Visa card to pay for your income tax via CardUp, you are paying a 1.75% fee while earning 1.4 miles per dollar. Then use the HSBC EGA to pay for your credit card bill via Gyro to earn a 1% cashback. And this is currently the best way to pay for income tax. So that was a quick video on how to save on your income tax. Hopefully you found this useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.